A big theme of the week was a wave of fear pummelling markets that high commodity prices were threatening the global economic recovery. With the latest news on how that's playing out now, it's over to Jayne Edwards.
Well, Alan, the commodities fear kept markets in the red over the week, but Friday was a better day on Wall Street thanks to the release of a handful of economic figures confirming the US recovery. The Dow added 0.5%, but the Nasdaq was kept in check by a sharp fall in Google shares. Friday's economic data showed both manufacturing and consumer confidence rising, while core inflation is under control. And key figures from China showed its GDP continuing to steam along, although inflation is rising. On commodities markets, oil gained at week's end to finish at $110 a barrel, while gold hit a fresh record and the Aussie dollar closed above $1.05 US. US results season has so far seen disappointments from Google, which plummeted by 8% on Friday, Alcoa and Bank of America, and more than 100 companies are reporting next week. Looking at world stock markets, the mood was bearish. The US and UK slipped by 1%, while Europe, Japan and Australia fell by 2%. With more, here's Tom Elliott.
Well, as you just heard, the Australian share market was sold down over the week. Its cause was not helped by Leighton. It announced a very large loss and also decided to raise $750 million of new capital at a discounted price. Leighton shares down at 12% over the week. BHP and Woodside continued their dance of the seven veils. Will they, won't they? Will BHP make a bid for what many people think is one of the last great takeover targets in Australia? Woodside shares down 1%, BHP down 0.5%. Many analysts still think that BHP has plenty of wiggle room should it decide to make a bid. Of course, BHP's cause wasn't helped by Rio, which announced a production downgrade. It seems that bad weather hasn't helped Rio. As a result, Rio's shares down 2.5% for the week. Turning to the media sector, and West Australian newspaper shareholders decided by a pretty thin margin to approve the company's purchase of the Seven network. Kerry Stokes was very happy, but the West Australian News share price did suffer over the week. Of course, quite a few funds selling their way out because retail shareholders didn't take up too much of their allocation of new stock. In the grocery land, well, Woolworths, which also happens to be a pretty large poker machine operator, his stock was sold down. It seems that if Andrew Wilkie gets his way and sees new restrictions on poker machines in Australia, that could affect Woolworths' revenue from this sector by as much as 20%. By contrast, its competitor Wesfarmers in the supermarket world was actually up in an otherwise weak market. Back to takeovers, and BCI, what a rollercoaster ride this stock has had. First the bid was on, then it was off, now it's back on. The stock was up strongly on Friday and up 4% for the week. And finally, the banks, well, people love to bash them, and National Australia Bank gave the pundits something to complain about. It's having another problem with its payment systems. NAB shares were sold off during the week, down 0.5%, as was most of the rest of the major banking sector. Winner of the week is Southern Cross Media, up 5% as its takeover of Austereo draws ever closer. Loser of the week is Hasty Group, down a massive 70% after announcing an absolutely terrible first half result.